There we go. And good morning, everyone, and welcome to First Friday 401k. I'm your host, Timothy E. with Green Retirement. As always, since we are recording this, I am required to give a disclosure, and here we go again. I'm Timothy E., a registered principal offering security and advisory services through Independent Financial Group, LLC, IFG, a registered broker-dealer and investment advisor, member FINRA, SIPC, Green Retirement, Sensiba, IFG, and HIP Investments. We are all separate companies and unaffiliated. And on that note, folks, boy, do we have some good news, I must say. First, we had our branch audit, the 25th one that I've had in my time in the industry. The best score you can ever get in an audit is 0. Not A plus, not gold medal, not 100 or 10, as they say in gymnastics, 0. And yesterday, our branch got a 0, and I'm very happy about that. I may have had a celebratory glass of beer last night or two. And then the other little bit of news that we have, again, I heard the good news. Paul, do you want to share it from HIP Investments? Congratulations, sir. Mighty proud of you. Paul is a friend, business partner, offering HIP investment models. We run his 401k. Paul, tell us the good news.
Thank you, Timothy and Rose. Nick Gower and I here on the phone are part of HIP Investor. HIP stands for Human Impact and Profit. And HIP Investor was nominated for 6 awards, shortlisted for 6 awards at the ESG Investing Awards. Last year we were nominated for 6. We won 2 silver medals. Last night here in London, where I'm calling in from, we won 2 gold medals, 2 silver medals of those 6 nominations. So we went from 2 for 6 last year to 4 for 6 last night. And so we're super excited that our HIP Investor data, ratings, analytics on climate, on corporates, and on muni bonds, as well as our strategies, including the Great Place to Work, were recognized. So thanks very much for the kudos. A delight to work together and collaborate, and happy to work with anyone who wants to invest in a fossil-free, sustainable way.
Yes, folks, you can get those through your retirement plan in all likelihood. Always happy to chat with you. Many of you do offer the HIP models, but any who don't, Nick, Paul, and I are more than happy to dive in. Well, it's my pleasure to welcome back CPA Tami Arnold. I am surprised that she is smiling and upright, particularly as we head to April 15th. But again, Tami, I would have to say, after 27 years in the industry, been there, done it, and you probably have quite a few t-shirts. Is that correct? Indeed, indeed. And you might be on mute, but we'll double check the sound. Hopefully, Tami, you can hear me. We have gotten a few. Okay, good. We have gotten a few questions that have come in. And folks, really, this is going to be Ask the CP Anything. When I did this conversation in December, I did ask folks if they wanted to focus in on individual, on small business, or on nonprofit tax. Overwhelmingly, people did ask about individual questions. So Tami, if it's okay, we'll start with that. In case anybody wants to dive into small business or nonprofit, please put the questions in the chat. I suspect Tami either knows all the answers or knows where to get the answers. I doubt after 27 years there's anything you haven't seen yet. So,
all right. You'd be surprised. There are some things that come through that I haven't seen. But we'll definitely try our best here. And if I don't have the answers, I'll reach out to you, Timothy, afterwards.
Sounds good. Yeah, no worries. Well, again, Tami is with Sensiba, and they are a B corporation. They have a very strong interest in ESG and sustainability, and they just happen to be really good at tax, too. Anything else you'd say about the company?
You know, we're a full service company. We can help you both with financial needs that you might have, along with tax. And we also have departments in sales tax, foreign tax issues. So please keep us in mind.
Sounds good. Well, diving right in, Tami, on the first question that I got, withdrawing money from an old 401k, what tax documents should people be looking for?
So your tax documents would be actually a 1099-R, and that will indicate, of course, the amount of distributions that you took throughout the year. along with any taxable portion, non-taxable portion, and any state or federal withholding. And in addition to that, if you also have a withdrawal from a 401k, but you have rolled that over to an IRA or another means of retirement, you will also get a 1099-R, but understand on there it will indicate the total amount that was distributed, but none of it taxable. And I'll have a code that will indicate G, indicating that it was a rollover. And you do have to report that still on your return.
As I recall, and it's been a long time since I've looked at a 1040, there was a line that said, how much did you take out of the 401k? You enter the amount, and then the next line said, of that, how much is taxable? You put 0, but it's been a long time since I've touched a 1040. I have a CPA who does that, and I hide under my desk. All righty. 401k loans, Tammy, taxable or not taxable?
They are non-taxable as long as you meet the rules and regulations and you do a repayment schedule of that loan. So you do want to make sure that you're following that. Of course, not all plans it mainly is based on a plan sponsor and whether they actually allow a loan provision within the plan. You can have those for 401ks, 403bs, also 457bs. Those are allowed. However, for a SEP, an IRA SEP or an IRA, loans are prohibited transactions. So you would not be able to do that on it.
Okay.
And you just you just want to make sure that you definitely do repay back the loan. If you do not, there could be potentially of course, tax on the amount that is not paid back. And then also too, there could be penalties up to 10% or 2.5% unless you're at least the age of 59 and a half, or there's some sort of exception to why it was not paid back. So you definitely want to keep that in mind.
Yeah, folks, typically your loan repayment maximum is 5 years. There is an exception for first-time home buyer, which says you may pay your loan back over 30, but most people don't stay at one employer for 30 years. Granted, I'm going on 19 years here with Green Retirement, but that's primarily because I promised not to fire myself. But yeah, most people go with 5 years. There is an amortization schedule provided, and please make sure you follow that. Right, that's 401k loans. Pre-tax and Roth contributions, Tammy, where are those shown?
Those are going to be shown on your W-2 in box 12. If it is a 401k contribution that you've made to your plan, that will be noted as a D code in box 12. And then if you're doing a designated Roth contribution through your employer, that will be noted as an AA code, I believe, in box 12 again.
Okay.
And just kind of keep in mind too that there are some saver credits out there for those that are actually putting away into their retirement. The credits are very minimal, and sometimes you have to have low income, but again, just want to make you aware of that.
Good point. Question coming in from Jasmine about the first-time home buyer. Does it apply to the 403b as well? I believe the answer is yes on that, Tammy.
I believe so, yes. And then I will also Timothy, send you some links with regards to other exceptions that are out there with regards to withdrawals.
Yeah, those ones, folks, I like to call the ones that I would not wish on my worst enemy.
Exactly.
There are exceptions called hardship withdrawals, things like foreclosure, eviction, ridiculously high medical debt, more than 7% of your AGI, and one that unfortunately one of my employees encountered, unexpected death of a parent. And that was not pleasant. Tammy, just to put you on the spot though, first-time home buyer, I seem to recall that a first-time home buyer was defined as somebody truly who is buying their first home, or somebody who has not owned a primary residence that they lived in for more than 5 years. So if I sold a home and lived in it 5 years ago or more, sold it, now I'm buying a new home, I am technically a first-time home buyer. Is that correct, Tammy, still?
That is my understanding, yes. I don't think that has changed.
Okay, good. All righty. Let's see. Oh, yes, the owing taxes question. I owe taxes. Should I go to my payroll department and talk about this? And then sort of tying it into the second question, which I've heard a lot of debate about, do you see utility, Tammy, in trying to drive your refund to zero or the amount you owe to zero? In other words, fiddling with your W-4 with payroll. What are your thoughts around those two questions?
Well, on your first question, you definitely do want to go to your payroll department to get the form if you need it, which would be a W-4 form. Your
Mm,
payroll department should not be giving you tax advice. So if you do need to change your withholding, definitely go to your payroll department, get the W-4. You can pull that also off on the IRS website. But you would really want to go to your tax preparer to get the advice on what you should be claiming on your W-4. If you do not have a tax preparer, there are some items on the IRS website. Again, Timothy, I'll send you those links so we can get those out to your participants.
mhm.
That can kind of help you figure out what you need to be claiming on your W-4. And I don't normally recommend IRS documentation because it can be very complicated, but I
Yeah.
will say that the IRS website does have some great publications and calculations and calculators for you that are very user friendly. So I will get those out to you. As far as driving your tax to zero, yes, of course, you do want to have on your tax return in essence, zero on it. You don't want to particularly owe money because it's always difficult to come up with that. And you particularly don't want to have a refund either because the refund means the government had your money all this time. And of course, they were earning interest on it and you weren't. There
Ah,
are ways to drive it to zero. One of the proper ways would be to have the proper withholding or estimated tax payments. Some other things too that you might want to consider to drive your tax down would be, of course, taking advantages of tax saving devices such as your 401k, IRA contributions, potentially also maybe contributing to a health savings plan or a flex spending account. That way you can defer money into those accounts and pay with tax deferred money any type of health expenses that
hmm
qualify under those plans.
hmm
Um, Other things just to kind of look at from a tax standpoint, potentially probably looking at your investment portfolio, seeing if you're potentially maybe invested in tax exempt items would help you. Also maybe harvesting some capital losses against capital gains.
hmm
Um,
Tax
and then of course
harvesting.
just, yeah, and then definitely taking advantage of some tax deductions or also tax credits that might be available out there. Like again, tax deductions would be itemized deductions, charitable donations. For small businesses, it may be qualified business income deduction. Certain tax credits available would be like for energy improvements that you might, energy efficient improvements that you might make to your home. Those are still available. So there's a lot of
Ah,
proper maintenance, that you need to do in your tax documentation, keeping proper records, and then, potentially doing some tax planning.
hmm Yeah, it reminds me when you mentioned about improvements, somebody early on in my career told me about a investment property they had and started in about depreciation of the improvements they were making on the property. Fascinating, absolutely
Mhm.
fascinating.
Yeah,
Um,
definitely.
for our individuals, though, and something I certainly did last year, I grabbed a bunch of stuff out of my closet and off to Goodwill I went, and out the door it went, and I felt a lot better. Should I be itemizing and noting down? They always ask me if I want a receipt, and I used to write down 15 t-shirts and three of this. What are your thoughts around donating? I mean, donating to charity is good, taxes or not, but from a tax professional's point of view, Tammy, give us your beat on that one.
Yeah, I definitely agree with you. Charitable donations are always good, regardless of whether you get a tax benefit. But if you are
Uh-huh.
looking to get a tax benefit, you do have to itemize. So you wouldn't be able, if you're going to be donating clothes or articles or appliances or fixtures, you want to make sure you do itemize those down. A lot of your websites, such as Salvation Army, will give you kind of an estimated value on that. So you do want to kind of keep track on that. You may also want to look at bundling your donations. So if you don't have enough to exceed the standard donation in one standard deduction in one year, so your kind of limited to what the government gives you, a standard deduction. You may want to think about bundling your contributions or itemized deductions so you have enough to exceed the standard deduction and you can actually itemize. So just to be aware of that, we do some bundling. Clients may, but instead of taking donations in 1 year and another, they'll just do it all in 1 year. You do want to make sure that you do have you're donating to a qualified organization. I know we have a lot of pages out there, where people are GoFundMe pages. Understand that they do need to be qualified organizations. And again, I can send you an IRS link on, searching for that. And probably the last thing, and it may not apply to a lot of any individuals here, but maybe to their parents. For those that are over the age of 70.5, you can directly contribute from an IRA that you might have to an organization. What happens is that the transfer is not considered to be a taxable event to you, but you don't get the deduction on the other end. So for some people that might be limited on their itemized deductions in their later years, but still want to contribute to an organization, qualified organization, they can do that through their IRA.
Okay, yeah. So taking your RMD and sending that onwards and not having to pay tax on that from your pre-tax money makes perfect sense. And Tammy, has the standard deduction gone up? Because I remember when Rose and I first were starting out, I could have sworn we really did go gung-ho on T-shirts and old appliances, and I dutifully sent all that to my CPA, every copy of every receipt I had gotten. Has it gone up, or?
It has gone up significantly compared to prior years. So a lot of people now are not itemizing. They do not exceed that standard amount. We're seeing a lot more individual. And two, there are certain limits now, like especially with the state and local tax limitation on itemized deductions. Before that, you could deduct your state taxes in full as a federal itemized deduction. Now that's limited to 10,000. There is some legislation on the table to, hopefully get rid of that because before it was very beneficial. So if you paid $30,000 in state tax, you got a $30,000 deduction, and that really caused a lot of individuals to be able to itemize. Now, because of that limit of 10,000, it really has limited a lot of people as well.
Yeah, we'll see. As I like to say, folks, tax legislation is all well and good, but until I see it printed, officially signed, it's all just on paper and ideas. Yeah, we'll wait for it to show up. Continuing on with the W-4, how frequently should I review my W-4?
I would definitely review it on an annual basis, or if there's been some sort of significant event that occurred maybe at the very beginning of the year. That's when you would probably want to look at changing your withholding federal and state.
Okay, so W-4 again, folks, from your payroll department, or if you want, just pop out onto the IRS website, you can get the W-4. Speaking of that W-4 again, sorry to keep hammering on this, but I had a different tax person say, look at filing let's see if I can get this. Put on your W-4 that you're single even if you're married. And that took a few moments for me to think through. I assume it's simply saying withhold more tax.
That is correct. Yeah, at a single tax rate, that is the most withholding that you can have taken besides adding a dependent or also making maybe potentially other deductions where you ask for additional withholding taken on your W-4. But yes, as a married couple, you can file each of you single, and you would have more withholding taken out than if you did married filing joint. And then just a little side note, when you do click on the box that says married, that already takes in consideration there are two of you, so you don't want to get married and then also, my spouse is a dependent. That is not correct. So that's something that I always see is kind of, people think, my spouse is a dependent. It's like, no, they take that in consideration with that designation.
Gotcha. If you put down a dependent, basically be saying married with a kid, I guess, or somebody living with you. Okay, makes sense. Let's see. Now we step into the to the world of esoterica. I know what the current administration is saying about cutting taxes, and my view is if you cut taxes, taxes go to pay for services, whether it's road repair or the public library or what have you. So if you're cutting taxes, naturally, I would say you either have to cut services or at some point taxes have to go up. It seems like the idea of cutting taxes, to me, it sounds like trickle down economics again from the 80s. But would you agree, Tammy, that you think taxes are going to have to go up at some point, that we're probably at some of the lowest rates we've seen in decades?
I do, well, normally customly, every year the IRS does do an increase in taxes, or what they do is it's called an adjustment to tax provisions. And they'll
Hmm.
kind of look at the tax bracket, the deductions, and all of the inputs into a return and change it accordingly to meet with cost of living. And I think on average, they had adjusted 2025 tax year to be about an increase, if I read it right, of about 2.8%.
Oh,
What, so I think we are going to see some tax increase, but what we particularly are kind of looking at from a CPA standpoint is we have a lot of provisions that are currently going to be expiring within the 2025 tax year, also the 2026 tax year, from the
hmm.
Tax Act and Job, I'm sorry, Tax Cuts and Job Act that
Yeah, which
occurred a few years ago. So
2017, yeah.
yeah,
Hmm.
so we're kind of looking at some of those, we don't think they'll be permanent. We do think that there's going to be some hybrids and changes that are going to occur in those provisions. So we're kind of keeping that in mind. We're also hoping that some of the items that I had talked about, like the tax limitation on state and local taxes, maybe that will be revised so that we'll be able to do more, get more of a deduction from our state and local taxes. So I think it's going to be a rebalancing act, especially also too with some of the tariffs that are coming into play. So we will.
Mm.
I will have to say, I wish I had a crystal ball on this. I know that there will be a lot of different tax legislation coming down, especially in 2025, 2026, just to kind of
Yeah.
address some of these issues of expiration.
Yeah, in 2017, the current administration was then in power as well, and yeah,
Right.
they cut taxes. And as I read the tax code, which remember, folks, I'm not a tax advisor. I had one class in college and one exam in that class on tax, and I remember my grade very clearly, and that told me that I will not do what Tammy does ever. I am not qualified, something to do with depreciation, and I got it wrong, and the whole exam was wrong, and my grade reflected that I was wrong. So that was the end of my tax career in college. But as I read the 2017 legislation, it looked like it said provisions are going to sunset in 2025, and barring a change by Congress, tax rates will go back to what they were prior to that. So that would indicate a rise in rates across. Is that the correct reading of how what the 2017 provision said, barring a change by Congress, rates would
Yeah.
revert?
Exactly. It would all revert back. So we do know that there's going to be a lot of legislation probably coming into play. And I think there was a comment on some, there are a lot of good articles out there. I know I tend to do the Journal of Accountancy, the CPA website. And again, I'll send you some of those articles with regards to the 2025 tax revisions. But definitely I would definitely consult with your CPA as the year comes. Maybe a mid-year review with them on what's coming up, because I believe probably we will probably be beginning, I would hope, some of these uh, new tax legislation in the summer or late summer. So
Mhm.
that might be a
Mhm.
good time to kind of reevaluate that.
Well, sounds good. Sounds good. Well, speaking of CPAs, one question that did come in was on when to hire a CPA and when to do it yourself with TurboTax. And actually, I had a prospective client in Texas call and tell me about something like free2tax.com. In state Texas, they don't have a state tax. So there's apparently a government website where you can do your federal taxes for free or something. When does it make sense to get a CPA involved?
Just as a reference to what you indicated, actually the IRS, before some of these cuts that came into play for them, was developing a website with regards to making it a little easier for you to actually file a return. Um, I would, I think that some of the third-party services that are out there that kind of help individuals with their tax return are good for certain non-complicated returns. I personally, even though I use a tax system, I personally don't recommend actually buying tax software and doing it yourself, simply because from the idea of garbage in, garbage out. You don't have a clear understanding on what your return should look like or where deduction should go. You may be actually inputting stuff into a tax software where you're getting the wrong results. But I know that there are a lot of third parties out there that will also sit down with you, provide you some services. And I would recommend, if your tax return is fairly simple, you would want to look at those services, along with some free services like the VITA program through the IRS. If you have more complex transactions that are occurring, you have a death in the family, you're doing a property exchange, you're dealing with a large investment transaction, or two, if your business has some complexity, meaning you're needing to have financial statements for a particular type of loan, or you have maybe a unique tax structure where you're dealing with a corporation as a partnership, or you have complexities within your business. And I will have to say, I really think all businesses should have some sort of consulting with a CPA, because especially with now having remote workers, which has become very popular with with something very bad, which was COVID. We now see that there are a lot more of our clients that were not aware that because they just have a remote client in a state, they may have nexus problems in that state, meaning that they would have a filing. So I really recommend that if you do have remote employees, even though you say I'm not, my business is not there, I'm not working in that state, I don't have a location, I still would recommend to kind of reach out to maybe a CPA. I mean, just to kind of confirm there's no type of filing requirement that you need to do for that state. We have a great salt department. In fact, I just emailed them today. I have a client that I just found out has a remote client in Massachusetts. I'm like, okay, does that create nexus for us? Because each state has their own qualifications with regards to nexus. So it's really important to think about that. Yeah, but if you have any type of, I would say from a, I know I'm going off a little bit on business. If you have I would say from a business standpoint, you probably don't want your CPA doing the accounting work. You really want to have a strong, bookkeeper, accountant, internal accountant that's helping you. That would be a lot less cost to you. I know we personally, if our clients need accounting service, we have a CAS department, a client accounting service department that specifically deals with accounting issues. Because CPAs, that's not really, I would say, it's not that it's not a strong suit. We can definitely do it, but probably not a cost-effective one for clients.
Not a good use of your time.
Exactly. We're dealing with more of the complexities of your business and issues that you might have. So I would say, again, from an individual standpoint, yes, some of your third-party providers can help you. If you have more complex issues, you definitely do want to seek a CPA. And I would say, just from a business standpoint, you probably do want to go to a CPA to at least get the tax advice. Again, not the accounting. I think that can be done probably through, QuickBooks and a bookkeeper. But yeah, more complex issues, I think that's probably where you would want to involve a CPA.
Makes sense. Makes sense. Yeah, I remember when we had an assistant in New York, there was some New York Department of Labor or something, and they were claiming we owe this, that, and the other. And it's a good point with remote workers working in all states and maybe being paid wages in those states. How does that get all tallied up? What is Nexus, Tami? I must say I don't know.
That's in basic terms, it's a determination whether you operate in that state and thus are required to file certain types of taxes or business license within that state. Each state has its own designation as to what they define as nexus. Luckily, I am very lucky. We have a awesome, we call it a SALT department, state and local tax department, that we can send questions to and say, hey, does this apply? And one of our individuals, Kaylin, who is the department head, she is excellent when it comes to this, as far as finding out research for you. Because there's just so many things that can open up with having a remote employee.
That's a good point. I will emphasize that because with COVID, unfortunately, many of our employers, they've seen the employees scattered to the wind, and I will make sure to point that out. Looks like Rose has a question. I've got a couple more for you.
I have a follow-up question.
Go ahead, Rose.
Yeah, thank you so much, Tami. That's such a great point. I just want to expand on that with how about for our clients who, like you said, not just have employees in another state, but also they're serving clients in another state. So you mentioned like a possible business license. Is that then something that is with needs to be squared with Nexus as well? So it's not just remote employees, but clients in other states.
That is very correct. Yes. So if you have clients in other states, or even maybe a warehouse in another state, you definitely want to consider that you may have a nexus in that situation. And like I said, I probably am not the expert in that area. I tend to defer that to our other departments, but be aware, that as you may sell out of state or have clients out of state, that you do want to kind of check on that issue, because it is important from a number of standpoints, like you mentioned, Rose, whether I need a business license. Maybe I don't have a tax return I have to file, but I do have to have a business license. Or there's some maybe like I know for the state of Oregon, and I think Washington, there is some different types of business taxes that are applicable.
Sounds like we got a little bit of back chatter there, so I'll see what I can do on that. Try to mute everybody. So hang in there a second. I'm trying to figure that out. I know Rose is the expert at Zoom. I am not. But there we go. No, dum. Yeah, I'm not sure whose that is, quite honestly. I'm looking at everybody and all of us are muted except you, me, and Rose. So anyway, folks, if you can, please mute your microphone. That would be very helpful. I'd appreciate that. Last time I tried it, Tami, I hit mute everyone and I muted the presenter. My poor presenter was left there going, ah. Anyway, couple of questions that, let's see.
That's it for night.
I'm sorry, Rose, did you say something? No, okay. I'm hearing things now. That's all right. There we go. Got that one muted. Okay, we're good. Couple of questions that Rose had brought up actually. In conversation, we constantly talk about our business and husband and wife team, 35 years. Not how is your day? It's, hey, here's a question. Flat tax. Wanted to get your thoughts on that. I've heard that a flat tax, just saying everybody pays 10% on everything. Regressive, could be even a flat sales tax. But the idea with a flat sales tax is that even the wealthy have to buy things. And then one that I'm probably going to misquote my wife, but it was the idea that why don't, the IRS gets all our tax documents. Why don't we just have the IRS figure it out as opposed to us all sweating through TurboTax? And in those 30 or 40% of the cases where it's ultra complicated, we basically get a CPA and say, you guys go figure it out. What are your thoughts on flat tax and having the IRS figure it all out, except in those really extreme cases where we need you guys?
With regards to flat tax, I would actually welcome it. It would be it would make my job probably a little bit easier, not a lot easier, but a little bit. Because a tax rate is just the rate itself. It's the other things that go into actually computing your taxable income that really becomes the big play. So flat tax is really not going to probably impact, at least from my standpoint, my work, because I'm more on the work of the idea of coming up with what the taxable income is. But I do understand, maybe just a flat tax alone, it would be nice. I don't think the IRS will ever go that way, but we'll see. With regard with regards to the IRS actually computing your taxes for you, I think probably on a very simple level, they might be able to do that if they know, of course, your marital status and your dependents. It's possible that they could move that route with less complicated returns. The IRS does have all of your income and some of your deductions, but not all of your deductions. So, and that comes into play probably more so with businesses. So for businesses, they would have the income part that's pretty much being taken care of with, of course, 1099s, 1090Ks, and all of that. But the deductions are kind of, they wouldn't have that information.
I got you. It's a nice idea, but
I agree with you. I agree with you.
All righty. Well, Rose, you popped in a question on taxes to defend. Did you want to ask that one, and then we'll throw it open and see what other questions are coming in?
And I share that so that our attendees can have an idea of what it would take to kind of level the playing field. It's more using taxes to reduce inequality, so it's more of a political thing. So not really tax related. But I do have a comment on the IRS doing our taxes ourselves. I think that if those really goes for the efficiency of our federal government, probably one thing that could be done, like you said, Tami, is for those who have like just income really that is taxed and standard deduction. I'm sure IRS would have the data of how many are just using standard deductions. For those people who are doing that, then it would really streamline the process if IRS can just do that. And so you can get like a opt-in, opt-out. Like, are you using standard deduction? Then IRS would just give you, this is what your taxes would be. And then for those who opt out, those then would go to itemized deduction. Small business owners like us, or corporations who have like really massively complicated tax issues, would then do their filing as usual. So I think that is one way that the government can streamline and maybe also help people with tax filing and give a discount to maybe lower the tax rate by a few percentage points for those who opt in. So the government gets its money right away. People don't have to sweat over taxes. And to me, that's like not just efficient, but effective for a certain group of taxpayers. So I think the thing there is to define like segment, like who can do this and who can do that, right?
I agree with you 100%, Rose. I think that could definitely be an option for you, or an option for a lot of taxpayers that are out there. I know, like I said, I think the IRS was working on a website to kind of assist more so for taxpayers to actually file through their system. And I think that would be a great idea. We need you to talk to our president on that
one. So I do have a question that's kind of somewhat aligned to that, with the news that we hear about IRS, agents being let go. Is that going to impact the filing for our participants for the March 15th and April 15th in terms of getting their refunds?
We are hoping that that will not. We do not know the impact. We know it is impacting some of the audits, and I think I talked with Tim about one of that too. Now that we've gone, a lot of taxpayers are filing electronically. We are hoping that that will not impact getting refunds back. But I unfortunately cannot guarantee that.
Yeah, I heard that the people they let go, and again, who knows? The people they let go were not involved in the tax filing side, but to me, I just see the IRS as sort of a blob, and they're all related to tax filing and tax collection. So, alrighty, folks, those are the questions that I've had emailed in, raised. What else do you folks have? What else is on your mind? Again, this is your chance in the final 10 minutes to ask a CPA. We are 1 month and 8 days approximately from April 15th. Anything and everything, folks. If not, certainly, Tami, I'm sure you have plenty to do, so I won't keep everybody, but I do want to make sure we offer the opportunity for any questions. Anything? Let me just check the chat box. It does not look like we have anything on the chat box. Roll back up to the top. We're good there. I don't see Rose frantically waving at me. Tami, any final parting words as we head into tax season 2024 for 2025, aside from drink lots of coffee and call your CPA? Oh, which speaking of that, Tami did give me a referral, folks, to a local CPA here in the San Francisco Bay Area. And the person was kind enough to respond with, "May I talk to you after April 15th about my ideal client?" At least that's the tone that I heard through the email. But that CPA definitely is not taking any more clients, at least for this year, maybe next year, but it sounds like the person is drowning.
Tami, are you? And how about Sensiba? Are you accepting clients, Tami? We just want to let our...
But also, who is your ideal client? Because Tami, you guys do some pretty high-end, complicated stuff, right?
We do. So we're primarily looking for clients that have businesses, of course, and maybe the related returns associated to that with that, like a shareholder return. That's kind of primarily what we are looking at because we do want to do a full service for that client. Not that we're not taking on, we do have a lot of high net worth individuals that we work with as well. Or also to those that might have complicated issues, but we're always open to definitely talking with people that might have an interest in a CPA. If we can't service you, we do have referrals that we have of different other CPAs that we've worked with that we feel are very good and that will provide you good service. Yes, there is a shortage of CPAs out there. I will say that. So we are accepting business, but at this point, as far as filing by 315 for our businesses or 415 for individuals, we probably would ask for to extend you because we don't want to rush through the process. We want to make sure that we've addressed all the issues. And of course, during this time, rushing can not be beneficial. But yes, we are always open to talking with new businesses or individuals that might need our service.
Wonderful. Any parting words, Tami? Anything last you want to say to our audience as we try to get through yet another season of tax?
The thing is, don't put it off. I would say if you need to get your return done, get it done. And that's the famous last words of a CPA who waits until April 15th to do her own return, probably. But nonetheless, if you can try to get it done, I would definitely get your tax return. Exactly. If you can get your tax return done, I would do it. Make sure that you are very organized when you do go into any type of tax service, that you have all your documents together so that you can address any of the issues right then and there and not have to postpone the filing. It makes it a lot much more effective and efficient for us preparing your returns. If you do need an extension, that is fine. Just make sure though that you do pay your taxes by April 15th or or in the case of business, 315. Again, an extension is not to extend paying your taxes. It is to file your return. All taxes still need to be paid by the original due date.
Actually, Tammy, that brings up one thought that I had a conversation. Maybe I misheard the employee, but it sounded very much like Timothy. I did not file my taxes for the last 2 years. And aside from my logical brain saying, wouldn't the IRS have already caught that? But I would personally say at that point, if you have to file old back taxes or returns or whatever, get a CPA. Don't do it yourself. Yeah.
Yes, I agree with you 100%. There are a lot of issues that come with filing a prior return. And then two, you would want to have a CPA to help negotiate any taxes due, outstanding penalties that might be related to those taxes that are now being filed. So I definitely would recommend at that point that you do get a CPA involved.
All righty, let me take one last look at the chat box. Don't see anything there. Rose, anything from you?
No, thank you so much, Tammy. Really appreciate you taking the time out, especially during this busy season, and really, really appreciate you.
Oh, no problem. Thank you both for the opportunity.
You got it, folks. Take care. Be well now.
Okay. Bye-bye.
Bye-bye.